Good morning. Today is Wednesday, December the 20th. The time right now is 9:22 in the morning, and we can see equity markets continue to edge higher even on lower volume. You can see that the micro E-mini Dow Jones continue to trade higher into new all-time high overnight at 37,939 in the futures market, and the cash index has gone even further at 37,562.7. So we can see that this Dow Jones is basically trading into all-time high. And as far as the S&P 500 is concerned, it's not that far away. It is the cash index. You can see the all-time high traded last year in January the 4th was 4,818.62. Last night high is 4,768.69. So we are basically about 50 points away from touching the all-time high, with a prospect of a breakthrough anytime soon. And in the futures contract basis, the micro E-mini futures, we can see the S&P 500 has recorded all-time high in the futures contract as well at 4,821.5. The last high traded in last year. The previous all-time high was 4,808.25. So we can see definitely market wants to go higher. And in the cash index in the Nasdaq 100, we have finally broke the all-time high in the Nasdaq 100, which are last traded 2 months before the S&P 500 and the Dow actually peaks in January of 4th last year. So we can see that across the board, we can see all major equity index have risen except for the Russell 2000. The new high traded in the Nasdaq cash index is 16,813.01 compared to the last previous high at 16,764.86. So this is definitely underpinning the market. We can see futures contract continue to edge higher. Of course, we knew that the futures contract has been leading the market higher even before the cash index broke into the all-time high last night. Now, the high traded last night is 17,037 even, and I've always mentioned that nearby the target is about 17,231. So for all intent and purposes, I think the upside potential is right now very vulnerable to sharp profit taking as we move towards the holiday season, which is going to be at this weekend. Okay, so let's watch out if market participants will close the markets before Christmas at a high or will come under profit taking. So over in Asia, we can see the Asia market continue to edge higher. This morning, we have the Nikkei 225 trading higher after pausing for the BOJ's meeting yesterday. We can see that the Bank of Japan maintains policy unchanged with no signal as to when they're going to ease monetary policy or whether they're going to normalize interest rates going on in Japan. So this has actually caused buyers to come back into equity markets, taking the Nikkei 225 to 33,620, which is not that far away from the year high at 33,870. So if the market do take out this level, we probably will see new highs traded in the Nikkei 225 as well going into the end of the year. So in the Hong Kong market, Hong Kong Hang Seng Index continue to be well supported, largely due to the fact that the Fed has signaling its intent to pivot. This is seen to be largely positive for equity markets. In fact, it is seen to be largely positive for riskier assets, including equity markets. So this morning, we have the Hang Seng trading at 16,719, which is a much better levels compared to yesterday's low, which is at 16,420. So by and large, we still have the prospect of the either the October close or the November close going to cap this market, which is marginally above the 17,000 level. If the market can actually close above here, then we can see prospect of further rises in the Hang Seng market, which has been largely very, very bearish throughout the year itself. Over in the dollar, we can see dollar continue to slide overnight. Again, the sentiments that caused the dollar to slide has now come back into play, and everybody is looking at the Fed pivot going to 2024. This is causing the dollar to come off, and the high traded so far is 102.64, which is the day before. So we can see by and large, although the dollar wants to bounce, it could not bounce because of the Fed upcoming pivot. So we can see that is also benefiting the principal currency. Euro dollar has benefited to trade back to close to 110 level from the overnight low, from last week low of just above the 1.0890 levels. Sterling obviously is going to be beneficial to the upside. The entire structure in the sterling is definitely a lot more bullish than the euro dollar. I've always maintained that. And last night's rally to 127.60 is no surprise. We do see a marginal high going forward. And the bracket to be concerned with is this bracket over here. Maybe I can show you where the bracket comes from. Is coming from this level here. That means to say that the market has a possibility of actually gunning for this high here. Okay, this is the 130 levels. Okay, and 130 is a big round juicy number. So I think the market may actually gun for that in the coming days or weeks. Okay, and over in the dollar yen has benefited again because the BOJ has not made any material change in their stand in terms of interest rates. So you can see buyers coming back in the dollar, and that has pushed dollar yen this morning to a high of 144.95 with the prospect of it going even higher. The market has already pulled back 61.8% so far from the drop from 146.60 to 140.95. So we will be interested to see if it can hold on to its gain. If it can, then there is a prospect of a challenge of the nearby swing high at 146.60. Over in the Aussie remains very well bid, and the market has taken out a key level here, which I thought is going to be able to cap further rise in the Aussie. Aussie this morning traded a high of 0.6775 with the prospects of further gains ahead. Okay, and in the dollar Canadian obviously is very much like the dollar index has been under pressure. The low traded this morning in Asia is 133.30 levels with the prospect of further losses ahead, especially if the dollar index continue to lose ground. Okay, and in precious metals, we can see the precious metals has been trading nowhere. The market traded to a high last night at $2,047.03, very, very near to the last week high of $2,047.95. So based on what we are seeing so far, the fact that traders are now refocusing on the pivot story may actually be beneficial for precious metal as well, especially in the face of falling dollar. That could be supportive, but going forward, we need to see further gains rather than marginal gains. We can see that unless the $2,047.95 is taken out and close above this level, there's very little prospect of any meaningful gain in gold prices. In silver, we are seeing the same pattern being play out as well. We can see the high trade is $24.29 last week, and prices dipped back to $23.64 before rising overnight to $24.17 thereabout. And this is again a pullback of 50%, which is marginally weaker than the bounce in the gold. Okay, so by and large, because of this very strong rally from $22.49, that is the bias to trade to the upside. Moreover, the medium-term directional buyer is supportive of higher prices going forward. In oil market, because of the incessant hijacking of commercial vessels in the Red Sea by the Houthis rebels, we can see that that has been underpinning the oil market, because the Red Sea is a very important seaway because a lot of commercial activity goes through that lane. And right now, the US has actually organized a collision of sea vessels, including navies from its allies, to actually start patrolling the Red Sea. But Houthis rebels has mentioned that they will not stop this activity until Israel withdraw from Gaza. So there is a political angle to this, and this is whatever the reason behind the hijacking, it is definitely supportive of oil prices, because a lot of crude tankers actually passes through Red Sea. Now, in the Bitcoin, we can see Bitcoin prices attempt to rally overnight, but we have a marginal high compared to last week. We have a high last night at $43,445, which is marginally above their last week high of $43,429. And immediately we see that there is a bit of a pushback by by New York-based traders. And in the meantime, it's fair to conclude that the sentiment is probably going to be sideways trading for quite some time, and the pullback from 44,750 is seen to be a corrective pattern because the overall trend is very, very bullish. And if the market can go lower, it's definitely a case of buying on the dip. I'm hopeful that at some point in time, market may actually retrace back to 39,000 thereabout for a better entry for those who are still waiting to get in. Okay, so this is all I have for you today. And in the meantime, you take care. I'll come back to you tomorrow with further updates. Bye-bye. Take care.